Let's understand what the retail investors' reaction has been to this kind of volatility. Are they sticking to the sidelines? And what exactly is the outlook on that front? Nikhil Kamath is the co-founder and CIO at ZERODHA. Nikhil, thank you for joining us. And at a time like this, we're looking at markets in the bear market territory. How exactly are retail investors reacting to this acute volatility?
Well, we see a lot of the retail right now paring down the amount of leverage they have. They're reducing the positions. And I think that's par for the cause because in the future, too, we don't know how this virus is going to turn out. We don't know the implications yet. I think we're at the very beginning of what this could be in India and the magnitude of which there is no way for us to predict or have a call on. So we are advising caution to our clients, and we hope that they continue to bear down the amount of leverage they use in the market and continue to remain cautious ahead of as much uncertainty as they can be.
You know, Nikhil, we're likening this kind of a fall to those that we've seen in the past, such as 2008, and when we have seen a lot of panic in the markets. What's the sense that you're getting vis-a-vis some of the other historic falls that we have witnessed in the past when the market has gone into bear market territory? Is this on those lines, or are we seeing a little more panic among the retail investors this time around?
It is on lines with what 2008, but the tough thing here is, at least in 2008, we knew what was causing the crisis. We probably had a couple of steps like adding liquidity in the system, which could have helped us tide over it. But I think the issue with this particular crisis is we truly do not understand what is going on in terms of the virus, and we don't know to what levels it could scale in. It's still in the very
Oops, we seem to have snapped that line. But yes, Nikhil was alluding to the fact that as of now, that factor of uncertainty, that continues to loom large, and that largely is creating the kind of panic. Who knew that yesterday, after seeing some semblance of calm, if you will, that today we would see these kind of rates on the screen due to WHO declaring it as a pandemic? So do go ahead, Nikhil, with what you were talking about.
Yeah, I think we don't know yet. We don't know how bad this will get. I think...
All right. Seem to have snapped that line yet again. But I just want to update you with the kind of levels that we're looking at for the markets right now, because it's not just the frontliners. It's been an absolute crash for the broader end of the market as well. The currency has weakened past 74 to the US dollar. You've seen most of the volatility index as well is at nearly a 6-year high as well. And as of now, we're only extending those losses. Aviation as a pack continues to dither in trade, the likes of SpiceJet as well as Interglobe Aviation. But it's not just that pocket. Across the board, you're seeing the selling pressure intensify. For instance, metal stocks, they seem to be the worst hit as well. That index in today's trading session alone has lost out 9%. Ditto for the PSU banks. And by the way, just pull up the small cap index for you, because that index is down now nearly 10% in today's trading session alone. Real estate as well as the autos and pharma, they have not been spared the carnage. So Nikhil was just updating our viewers with what's happening on the markets. Give us a sense as to what retail investors are doing when it comes to their positions for the mid and small cap stocks, because they have burnt their fingers badly, and it seems like no one can be spared when you see a 10% fall in the small cap index on a single trading day. In fact, within just an hour and a half of trade.
Yeah, I think the mid-cap to small-cap index is something wherein investors have seen the most hurt in the last week and a half. Even crude, for that matter, people who trade commodities in India, I think crude falling in circuit the way it did a couple of days ago has caused significant damage to retail investors. Right now, I think at least the way the government is reacting to the problem at hand, the Indian government seems to be taking more ownership of what the problem could escalate to, and they seem to be doing a lot more than many other countries, which still seem to be in denial in a certain way. Especially at this point, I would personally recommend that, until the volatility subsides, it's probably prudent for retail investors to stay away from the small and mid-cap space and re-enter the market in a systematic manner, wherein they can allocate a certain amount of money every month into the stock markets with a longer term outlook instead of trying to bet on what might happen in the short term or the very near term based on the drop or rise in stock prices of small and mid cap companies.
Okay, and so what is it that you're noticing? Are retail investors now sticking to the on the sidelines? Is there, a press of the panic button on the sell side? What is it that you're noticing, Nikhil?
We're noticing a lot of the companies which have traded at elevated levels, companies with Ps of about 50, 60, these are the most hit. There will be a flight to quality, but I think the time for that is not now. I think all of the volatility has to subside. And once it does, we believe that people will again start moving from companies of low quality into companies with better management and higher quality and larger cap companies versus the small and mid cap companies, which might not have the amount of firepower required to tide over the uncertainty that we might have over the next 3 or 6 months.
Okay, thank you, Nikhil, for giving us a sense as to what retail investors are doing at a time like this. And we seem to be the hardest hit today because the fall is only escalating as we speak.